Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. First and foremost, I apologize for the video quality. Perhaps the sound is a little different. I honestly did not plan to do any interviews this week while we were on vacation, but my good friend, Mr. Dan Bird, sent me a note saying, I got a warning for your folks. Can't you squeeze me in? And I'm like, if you got a warning for our audience, I will make it happen. So again, video, audio, we're going to do the best we can. We're going to get this done in one video. But Dan, thank you very much for adjusting your schedule this morning.
Yeah, no problem. I know you're doing this earlier because you're getting ready to leave. So
yeah,
it's
exactly.
not going to be, we're just doing one and it will be abbreviated probably.
Yeah, so we're basically going to cover what we normally do in two videos in three. First will be a look back. Let's take a look back last week. We obviously had CPI Monday, which came in lower than expected. I think expected was 8.7, came in at 8.5. You wanted 8.3. I'm going to call that a win. You were right. And then more importantly, I think PPI came in lower than expected, kind of that validation, that wholesale number. So what'd you see in the market, when you got confirmation? And again, I don't think you're calling it because there's not a trend yet, but a lot of people started saying peak inflation.
Yeah, I mean, it's just one data point. So we need the next one, which will be before the next Fed meeting.
Correct.
And I think that it will continue to go down.
Yeah, because we've been here before, right? We had 1 month go down and then it went back up. So
yeah, we had 1 month that went to 8.3, and then next month it went to 8.6.
Yeah, so
instead of continuing down. We had 8, I think it was 8.5, 8.3, and then we went to 8.6.
Yes, 8.5, 8.3, 8.6, correct.
And then the 9.1, and now we're back to 8.5. So basically, same place we were 4 months ago.
Yeah. The interesting thing on this number, and I think we talked about it last week, I know I talked about it on Monday with Taylor, is I said headlines coming down, and I actually said 8.3 as well as you. So we were both off a little bit. But I actually thought core would go up, and core was obviously flat. Core, I don't see the things inside to make core come down, right? We've got gas, obviously 60 some odd days in a row, food coming down with the commodities, and probably again, I think headline comes down lower next month. But that core number, man, that core number could be sticky, and it might go up next month because of rent. So what do you think of headline comes in and core is
I think core is going to be flat for a while, actually.
Yeah.
I'm not sure it's going to go up a lot. I'm not sure it's going to go down a lot either. I think headline will continue to slowly go down.
Mm-hmm.
It's not going to drop as quickly as folks would like.
Yeah.
I thought it was interesting that the Biden administration took a victory lap saying that inflation is now at zero.
Was zero. I thought that was very creative. Inflation is zero.
Like they don't think that Americans know what the real story is.
Well, I mean, there's sometimes when you can actually say a statistic, but then you got to remember that most people are going to go to the store and go, not zero where I am. That's right. That might have been an accurate statement, but probably not a wise statement.
It's an accurate statement with a qualifier.
Oh, of course. That's what I'm not. Believe me, I'm not defending him. I'm just like, yeah, the victory lap was probably not a wise move.
Right. It's like calling the spending bill
Inflation Reduction
Act. Like they don't think Americans are stupid. They think we're stupid out here.
Yeah. Well, yes, Dan. They think we're stupid. Yes,
some people might believe that. Inflation
funny.
is caused by spending.
Agreed. Yeah. Oh. Inflation has always been, I think this is Milton Friedman, has always and always will be a monetary phenomenon.
Right. That's right. And the Fed can only affect the demand side. They can't affect the supply side.
Correct.
If the Congress wants to continue, exacerbating the supply side, and by supply, I mean money.
Yeah.
They keep creating money to pay for all these programs.
Yep.
The Fed can't affect that.
Nope.
So no matter how much the Fed raises the rates, it's not going to affect inflation if Congress keeps spending.
I agree. So what did you see in the stock market last week? Because again, you got what you wanted. You and I talked last week. I remember asking you explicitly, what happens if it comes down? You'd said the market would pop. You also, I don't think, got your validation of Head and Shoulders. I don't think that happened, if I remember.
No, that was negated, actually.
Oh, wow. Look at that.
Let me show my newsletter real quick.
Oh, yes, please. Sorry.
For anybody that wants to participate.
It's funny. I think I got 8 messages yesterday after you sent it out saying, Michael, this might be one of Dan's best newsletters.
Somebody sent me that too.
Yeah. So, yeah,
I'm not sure why, because I just did the same thing I always do, but
your newsletters are always good and they're free.
and they're free.
Yeah.
Right. I'm toying with the idea. I don't know how the formatting comes through on your side. One person said the formatting, it doesn't look right on their screen, and they have to scroll right and left to read it.
Oh no, it comes fine.
But they're the only ones that said that. So I'm toying with the idea of creating it as a PDF file instead of an email.
But
I don't know.
Yeah.
So I might try it once and see what people think. Anyway, the newsletter, like you said, is free. I send it out every Saturday as I'm doing my own research. If you want to get included, send me an email at breakpointtrading@gmail.com, and I'll add you to the list. And if you want to stop getting it, just let me know. No big deal. I put little cartoons in. So this one in the upper left I thought was great.
Yeah.
It's a tweet from Elon Musk. When the country that revolted over taxes hired,
I saw that.
1,000 new IRS agents. Is he implying we need another revolt? Could be.
No comment.
The one on the right up here, I actually put in for a friend of mine who's not on your group of people, but he's
beating expectations
back years and years.
Yeah,
he's been a big proponent of Novavax.
Oh, okay.
And up to 2 weeks ago, the CEO has been telling everyone that they're going to report $1 billion in revenue. And he's been pounding the table on Novavax. You got to buy this. You got to buy this. And I didn't, because I didn't really like the chart. Well, they reported last week and they missed by 40%.
Yeah, that's not good.
Not $1 billion, 600 million. They missed by 40%. They only got 60% of what they were promising. So that's why I put this in here, a little Novavax logo there. Funny. We're beating expectations, and here's expectations being beaten.
Yep. I like that. That's very creative.
I'll talk about this right now, this emotional market cycle. This actually comes from VectorVest. And this kind of tells you, where the cycle is. Right now, this week it reported 1.66.
Yeah, that's crazy.
And you can see 1.6 is the high. So this is one of the warnings that I mentioned, that it's way overbought, way overbought. And then I put this in here, which comes from Stock Traders Almanac, where they do a ton of research on historical information. So this is the last 21 years, what the market has done in August. And it's, all of the market segments, Russell, Nasdaq, S&P, et cetera. But you can see typically in August, it runs up right until the middle of the week of options expiration week.
Yeah.
This is my second warning. Options expiration is next Friday. And as I said in my newsletter, although I left one piece out, there's $1.9 billion in open call options interest.
So let me just kind of repeat that for the people listening to that heard the numbers but don't get it. Basically, that's a bunch of retail investors who were, I don't know, buying the dip or thinking the Fed's going to cut or whatever they thought. They thought the market would go up. For whatever reason, they've been proven right. They now have a positive bet of $1.9 billion that the market makers are on the hook for.
Yeah, and it's not just retail. It's investment houses, anybody that's buying options.
Okay.
So basically everybody and their brother is buying the dip. The dip was in June, hit the bottom. So everybody now is convinced the market is headed to the moon. So they're buying call options. And those call options expire on Friday. And market makers have to make the other side of a market.
Right.
So the way it works, and Tom Bowley does a session, he's going to do it next week, which I'm going to tune into. There's a session every month before options called Max Pain. What's the maximum pain? What's the point that is the maximum pain for market makers? In other words, he takes all of the call interest and all of the put interests and takes the difference between those, and it gives them the price at which the maximum pain is. Now, up until this week, the last few times, and I put it in the newsletter, last few times the market had been going down dramatically. So max pain was on the upside, which means everybody was buying puts.
Right.
And so at options expiration, in order for the market makers to not have to pay out on all those puts, if they run the market up and those puts expire worthless,
right,
market makers do not have to pay billions of dollars to cover those.
They just collect their fees for the options.
They just collect the fees, right? And they're taking the other side of the market as well. So as the market was going down, number one, they want those to expire worthless, those puts to expire worthless, right?
Right.
They don't have to pay on them. But number two, they're taking the other side as well. So they're buying stocks as everyone else is selling stocks. So that continues into the next week after options expiration. So in March and in May, the market was tanking big time. And that's when we had our big run-ups. People were calling bear market rallies.
Right.
Had the big run-up, and then it dropped and it went all the way down. In fact, it went even further down. And in May, it went further down again. And the same thing happened. Options expiration, it ran up because of max pain. So market makers didn't have to pay out those puts. People were still buying puts. So the market went up and all those puts expired worthless. And market makers were buying stocks for about a week or so. And then the market tanked again and went to its low in June.
Okay.
This time we have the complete, it's going to be the same thing, but it's a complete opposite situation.
Okay.
Now the market's been going up. Instead of buying puts, everybody's buying calls. Right? So max pain now is on the downside. So it's to the market maker's benefit to run the market down next week so that all of those call options expire worthless.
And just so I think I remember this, they expire on Friday, close of business, right?
Yes, that's right. The end of the day on Friday.
Got
it. So, that's why in this is very interesting here from Stock Traders Almanac. And this is next week in between these two vertical lines, right? And here's Wednesday. So the market runs up and then runs all the way down. It actually goes down almost to where it was a month ago. So that could be a big sell-off. And a lot of times it continues into the next week. Although I think the good news is I think that's going to be it. I think after that, we're going to probably be heading higher.
Yeah, we get a couple of interesting economic news. I think options obviously are going to play a disproportionate given what you've just shared with us, right? Because again, it's 1.9 billion on the SPY, right? That's not Nasdaq. That's not anything
that's
else.
Right. And I forgot to put that in my newsletter. That's 1.9 billion open call interest only on the SPY. So that's just the S&P.
And Nasdaq is bigger, right? If you're going to do it on the Nasdaq or the Qs,
not only is
that's
the Nasdaq
more
bigger, but that's where everybody's been buying calls.
So it could be 5 billion. It could be
a total of 5 billion just on those two indexes.
Yeah, so I think that's going to be. I think you're right. I think that's going to be something to watch for. There are two interesting economic reports. One is retail sales. I think it's Wednesday,
right?
And then the other one is existing home sales, right? How busy or slow next week. And again, I think both of these reports are going to be the classic good news is bad news or bad news is good news, right? So if we get a bad retail sales, meaning it's negative, or we get bad existing home sales, meaning it's worse than expected, I think that is seen as good news, meaning the Fed doesn't have to tighten.
Right.
But if retail sales comes in higher and existing home sales, for whatever reason, surprises, it's good news. But again, it's bad news for the Fed. Is that fair?
The Fed can tighten knowing the economy can take it.
Exactly. So I think those two reports are interesting.
I think the interesting one to watch on retail is the inventory levels.
Yeah, well, we get a bunch of reports, right? We get Home Depot, Lowe's, Walmart, Target, all next week.
Yeah. This is the image that I put in the newsletter that shows what I was just explaining. What happened in March as the market was tanking. Here's options expiration. This line right here. You can see just before options expiration, the market starts going up.
They forced it up, yeah.
So all of these open puts end up, expiring worthless. And then the market continued. And then the market dropped, went below the previous low, kept on going down.
Interesting.
And here's options expiration in May. Same thing happened.
So now we have the reverse trend. The market
now
is generally, but
now it's all calls. Everybody's been buying calls
right
into options expiration. So from the market maker's perspective, it's to their benefit by billions of dollars
Yeah.
benefit to run the market down.
Well, do me a favor. I think you had it in your newsletter, so I think you could find it. Do you have Bowley's event? It's a free event, I think
Yeah.
you said.
Yes, it is. I do. Let's see if it shows up. It didn't show up here, but I do have it.
No, it's in the newsletter, so yeah.
Well, it's in the newsletter, but it didn't really show up for some reason.
There was a link though, I remember.
There is a link. You can just put your cursor over this and click the link.
There you go.
Yeah, he's going to do this on the 27th. He did this back in January when the market was at all-time highs. And he said the market is going down. He explained why, which I've explained on this channel many times.
Yep.
Same thing that he said. He said it's going to go down for 6 months. And after 6 months, it's going to start going back up, and that will be the end of the bear market.
And he had the Bally bottom. I think it was on your chart. He still looks pretty good.
June 16th. That was in early January 4th or 7th or something. So he's kind of doing the same thing on August 27th to talk about the rest of the year, where he thinks the market's headed for the rest of the year.
Yeah. If you're watching my channel, folks, and you have the time on Saturday, you might want to tune into this. Again, go back and watch Dan's playlist. We talked about Bally a month ago or so, talking about the Bally bottom. It was really good.
Right. So a couple more things real quick. This shows you a negative divergence. I'm always looking for divergences on charts. So this is a 65-minute chart. I showed this last week, but we didn't have this extra uptrend right here. So now the market's actually hit another high. You can see the gap up when the CPI number came out.
Yeah.
Right there.
Yeah.
The market kept on going, hit a new high, but the momentum indicators continuing down. So while the market's hitting higher highs, momentum is slowing.
Interesting. Okay.
Another cautionary issue for next week. This is the Nasdaq. It's even more pronounced on the Nasdaq.
Yeah, I see it.
Right. This is a chart that I showed before that includes the 10-year Treasury. 10-year Treasury has started to creep back up. Still below 3. Although the VIX is continuing to go down. Now, by the way, if the VIX gets below 17, that's the area that is normally a top as well.
Interesting. Okay.
That's
just everybody's bullish.
Everyone's bullish. That's complacency. This is the dollar. I said last week, watch this. If it gets below the 21-day moving average, then
I think you have a shot next week. Again, I think we have bad news is good news. Good news is bad news. I think if retail sales come in light, home sales come in light, this could happen. I mean, it's going to be more evidence that the Fed can back off.
Yeah, if we get a weakening dollar, we get a 10-year that stays below 3, and we get another good inflation report, the market's just going to take off.
Oh, it's going to take off. Yeah, go bonkers.
Till the end of the year. This is the VIX. VIX has just steadily been going down. You can see here's 20, and now it's below 20 right now. If it gets down in this area down here, that's usually where you can see over here in January of 22, right here, it was below 17.5 over here.
Yep.
And that's when the market started going down.
Gotcha.
So VIX is opposite the market. When it goes down, the market goes up. When it goes up, the market goes down.
Yeah. Okay.
So there's January. If it gets back down to this level here, this is in April, where we had the rally in March that I showed you. The market makers engineered.
Yeah.
And then after that rally, we started going down again.
Okay.
So if we get down below this line, which we already are below this line, but anything down here in this area is about the time when the market goes down. And then I put this on LinkedIn. I didn't put it in the newsletter, but this shows the market is these red and green. This is actually the Nasdaq. These are the 2 recessions. You can see in green right here and in red. So this is the rate hike. This is the Fed rate hikes. When they begin, this is when they begin, the market was going down. You can barely see it down here, but it went down 26% right here.
Oh, wow.
All right. So when the rate hikes start for about 4 to 6 months, the market goes down. Here's before COVID. This was actually almost 2 years before when the Fed started raising rates. The rate hikes begin. The market actually went down, in this case, 25%.
Yeah.
Right? For 6 months. And then the market went up.
So basically, so this is kind of like, hey, the market,
adjusts.
takes time to unwind, reposition.
Exactly.
And then they just, it's not the next Fed increase, it's the start, and then they get used to it. The Fed tells them what's coming, they plan for it.
Okay. Right, until the Fed goes too far.
Correct.
Yeah. You can see they went too far in 2018 right here in the market tank.
Taper tantrum.
Right now, this is the red. The rate hike started here. We're just about 6 months in, but we've already had our correction. In this case, 35% on the Nasdaq. Right now, we're starting to head back up, just like we did both these times.
Okay.
And then up here is the recession. So two points. The recession doesn't start until after unemployment rate. That's this red line. The unemployment rate stops going down and starts going up. That's when recession hits. So over here, it hit the low right here, started back up, and then recession.
Got it.
Over here, it hit the lows down here, started back up, went back and hit the low, but started up right there, and then recession happened. Right now, we just hit a new low. We're not in a recession or going into one yet. We haven't started going back up on the unemployment rate yet.
Yeah.
And the same thing with the Fed rate hikes. Recessions don't happen when the Fed is raising rates. You can see all the way through here. You can see how high the rates went back here. Fed kept raising all the way to here. We didn't have a recession until the Fed started lowering rates.
Interesting.
And in this one here, Fed kept raising, no recession. Fed started lowering, then we had a recession.
Got it.
So both of those things will show you when a recession is coming, and neither one of those is indicating a recession yet. Doesn't mean it won't happen.
Right.
It easily could happen.
Oh, of course.
Which is just like, like I said with the head and shoulders. Here's the left shoulder, here's the head. Right shoulder I was looking for down here.
Yep, it never happened. Yeah.
It never happened.
Yeah.
It's the neckline. We started to roll over, but then the CPI number came out. We blew right through it.
Yeah. Where are we at now? I didn't even check because I've been away from my computer for.
We're at 42.19.
Oh, wow.
We're at 42.80.
Wow, almost 43. Wow.
Almost 43. 43 is major resistance. This is another part of the warning that I mentioned.
And what was the peak of the year? Like 5,000 or something?
The year was 48.16.
All right, so call it 48. Wow. Okay.
Right. So with the head and shoulders, the target was right around here, a little under 47. With this move here, the target is still right around 45.50.
Okay.
Close to up here.
Yeah. So when I just try to marry all of our conversations to go, you basically expect the next 5 or 6 weeks to kind of give validation that the economy is slowing down, but basically when we get to September, your current call is 25 or nothing from the Fed.
Yeah. That's right.
Yeah. So I'm going to take the 50 or 75, but again, I think you've been right. I think the last several weeks you've been on it. I've been wrong. This is why I love these conversations. Again, as you've told me many times, the stock market is not the economy. The economy is not the stock market. So I appreciate your wisdom and thoughts. Any other kind of closing comments we need to bring up here?
Yeah, we've got about 10 minutes. I think you gave me 30.
Okay.
So
let's do it.
On a show, but yeah, I mean, all I'm doing is looking at what the charts are telling me based on my experience looking at these things over 20 years.
Yeah.
It doesn't mean it's always going to happen.
No.
I'm not making predictions.
Nope.
It's risk management.
Yes.
How do you manage your risk?
Yeah, I think we need to hit that more often. That's really what, when I reached out to you and we started your playlist, it was like, hey, help me understand risk management, because before I was a gambling idiot with stocks.
Right.
So yeah, all of this we're doing here is about your personal risk management. So I appreciate you.
Yeah. So what this means for me as a trader is I got out of most everything on Friday.
Oh, you went flat. Okay.
Not completely flat, but almost flat.
But the things you kept are investments, not trades.
Well, they could be trades. They could also be trades.
All right.
They're just still looking pretty good. But some of the growth ones, like some of the chip stocks that I was in, that I made quite a bit of money on in this run up, because of the three things that I've mentioned already, the 1.66 on VectorVest, the options expiration coming Friday, and this 4,300 level right here. My risk management tells me don't play with fire.
Yeah, the upside's not worth
I
the
could be
downside.
wrong. This could blow right through 4,300 and keep on going.
Absolutely could. Absolutely.
And then I'll get back into those stocks, and I have no problem selling at a certain price, and if it goes higher, buying back at a higher price.
Yeah, the momentum's the right way. I like it. Okay.
But right now, risk management tells me be careful.
Okay.
The next week and the week after, going up to the 1st of September could be a struggle for the markets. Now, a couple of things I want to show, just kind of my process sometimes. In Investors Business Daily, they always mention some stocks that are getting close to buy levels. So I want to look at, there's 5 of them this week. Very quickly look at them. And the reason that these are getting close to buy levels is something called a cup and handle, which is another technical analyst pattern to look for. A cup and handle basically is stock makes a high, it retraces to a low, it climbs back up the right-hand side, so it forms a cup. It gets to close to or a little higher than this previous high, and then it starts selling off. And that makes sense because these people over here that bought in when it started going down, they just want to get back to break even, right? So they start selling when it gets back up to that same level. It forms a cup. And this is the point where once it breaks out of the cup, that is the buy signal. That is very often a really good buy signal on a strong stock. So this is one of the ones that they mentioned was on semiconductor. And it actually not only, and this little blue area is what IBD, they actually show you the chart. They show you where your buy point is, and they'll show you where your sell point is, and they show you where your loss is. So where to put your stop, right? So it's kind of nice. Not only did it break out of the cup and handle, but it broke right at or above this high that went all the way back here to beginning of the year. So this is making new highs. Another one was Builder Warehouse. Builder's First Choice. Same thing. You can kind of see the cup, the handle. This hasn't quite broken out yet, but that's coming up on it. EQNR. So this one again, here's the cup. Here's the high right here, 39.15. Hasn't quite broken out yet, but once it gets above 39.15, that's the buy point. By the way, this essentially is a Darvis box. Remember way back.
I do, yeah.
Talked about Nicholas Darvis in the 50s. He was a ballroom dancer. And he started noticing as he was traveling the world, he started noticing good stocks would form a box. They trade up and down inside of a box. And once it broke out of the top of the box, that's when he would buy. This basically is a great example of a Darvis box. So in his case, when he gets to this blue area up here above 39.15, that's where he would buy it. All right. KBR. Here's KBR, same thing. Cup and handle, the high over here is 56.94, but the buy area is as it breaks out of this handle. So 53.50, if it gets to there, that's the buy point. And then the last one is, what is that? Did I do them all? 2, 3, 4. Oh, Costco. Costco. Here's Costco. Little handle right here.
Oh, wow.
So in this one, you can actually see where they recommend taking the profit, which is up here.
Okay.
Here's your stop loss. Here's your buy area, which is about 552, 553. And then run up here to about 650 or so, 700, take profit. So that's 5 that were in IBD this week, just to give folks a sense for kind of the process that I go through.
Hey, do me a favor. We talked about it earlier, 4 retailers report next week.
Okay.
You want to look at those 4 and see how they look?
Sure.
You can use whatever chart you want, this one or something else.
Home Depot.
Sure.
Oh, by the way, the other thing, like on Costco that I really like about the IBD site, it shows you what the previous earnings were.
Oh, there you go.
Shows you the trends down here, which is nice. So Home Depot, It's still working on the right-hand side. It's got the 200-day moving average above it.
Okay.
Which could be resistance. It's got downtrending earnings. So that's not good.
Not good.
Earnings is in 2 days.
Yeah. Starts. Yeah, I think them and Walmart are first. So right. Home Depot, then Lowe's. Let's compare those two.
Lowe's is getting closer to its 200, so there's resistance right there, the 200.
And then their earnings.
They had 0 and then 9, so they had a little better earnings, but a little worse revenue.
All right. Then Walmart.
Didn't Walmart already report?
No, it's Tuesday.
Tuesday. You're right, Tuesday. Yeah.
They've revised twice, but they haven't reported.
Oh, that's right. So here you got Walmart. Kind
of negative 23
and negative 23.
Yeah, and they've warned about this quarter.
I think they will probably beat their.
No, of course. Walmart's no joke. They lowered the bar so they can get over it. They didn't lower the bar like who did that? They lowered the bar and then came under it. That was not a good idea. Yeah, yeah. And then the last one is Target. Sorry.
Target, 200 days up here. It's above its other moving averages.
Ooh, look at that.
41 last
41. Time. Oh,
that does not look good. So Walmart and Target, I'm questionable on those. Yeah. Home Depot and Lowe's might meet estimates, but they've got some overhead resistance.
Yeah, there's a lot of stuff going on. All right.
And then STEM, the one that I showed last week.
Oh yeah, STEM. Yeah, the stock of the week, I think it was.
Yeah, stock of the week last week. I don't really have a stock of the week this week, but other than those ones I went through, you can see it went up and now it's going sideways. I actually got in at 1475 on 1/3 of my position.
Right.
And then I'm going to see what happens, but it's actually good that it's moving sideways because you see how it ran up right here. They had earnings right here and it took off, but it got way above its moving averages. So when a stock moves sideways, that's actually a very healthy, good sign because it allows the moving averages to catch up.
Right. Okay.
Right. So I'm going to watch that one. If the market struggles, this one could come in a little bit.
When would you buy your second third? Do you know?
Well, it depends. If it starts coming in, I'm at 1475 right now. I mean, if it gets down, to the 21 day,
which is what? I'm sorry, I can't quite.
Let's see. Does this tell me? I'm not sure if this actually tells me. But let me go back.
We can guesstimate. Oh, maybe not.
I can show you.
Here's
STEM right here. All right, so the 21 day is at 1195. So if it gets back down here and the 200 day is at 1262.
Okay, got
it.
If
it gets down to 1250 to 13.
Okay. You'll buy another third?
I would buy another third there and then see if it starts going back up or if it continues down. And then if it starts going back up, I'll buy my last third when it gets back up to my original buy point, 1450 or so.
Okay.
If it doesn't come down, it starts to take off, then probably somewhere around 16, I'll buy another third.
See, that's this is what you're trying to teach me, right? You ladder in your position, you have your points, you have your stops, you have all that stuff.
Make the stock prove itself.
Yeah, exactly. I like that. Thank you.
So one last thing, we got 1 minute. One person sent me a note saying, can you talk about your daily process?
Oh.
What do you do typically? I mean, there's a lot of things that I do, and I look at a lot of charts, and some of the relative strength charts I put in the newsletter now. They're at the end of the newsletter. People can bookmark those and look at them anytime they want. One thing I do is I start at the high level. What's the market doing? Number one, it's going up.
Now, when you say market, just so we're clear, that's the Dow, Nasdaq.
Yeah, Dow, Nasdaq, S&P.
Right. Okay.
What are they doing? They've been going up since June, middle of June.
Okay.
So then I want to go to the next level down is what sectors are performing. So as we should expect, it's consumer discretionary and technology. But this is a 1 month view. But I've noticed that industrials are making a big run. So industrials are starting to come back and actually, moving up faster than these two.
Oh, interesting. Okay.
So I'm wondering what's happening in industrials. And
what's an industrial company, for example?
So industrials, here's.
Okay. Yeah, I got it.
Trucking, machinery, transportation, heavy construction.
Got it.
Marine transportation, commercial vehicles, things like that.
Okay.
So I clicked on that. I clicked on the industrials. This gives me all of the industries. So I can start with the ones that have performed the best over the last month. And one that I noticed is heavy construction right here.
Right.
So if I click on heavy construction, it shows me the stocks in that industry that are performing.
Is Deere in this by chance?
I think Deere is in a different one.
The reason I asked is because Deere reports Friday. I'm just curious.
Okay.
No big deal.
So these are all, here's KBR, which was on that Investors Business Daily list.
Yep.
So I can actually click on that and look at the chart.
Okay.
So now you can see the cup and handle, just like I showed before. So the buy point is when it gets above this high right here, the left side of the right side of the cup.
Yep.
When it breaks out of that, these are Investors Business Daily rules, by the way.
Yeah.
That they put out there. So it says when it closes above the cup, that's the buy point. So somewhere around 54 would be the buy point. And you can see the accumulation distribution looks really good. The industry group looks good. They've been underperforming their industry group. So just out of curiosity, here's Deere. Deere's had a really nice run. It's above its 200-day.
Oh, wow. Look at that.
It's outperforming its industry group. Industry group looks good.
Cool. So
Deere actually might do well. I'm a little concerned about the overbought situation with the RSI up here.
Yeah, it's up there.
So yeah, this is one to watch and see if they have good earnings, but they sell off, which could happen if the market's struggling.
Right.
If they do sell off, then it's a good opportunity to buy lower down here because they probably will continue up.
Got it.
In general, it's a good thing to watch for. If you identify a company that looks strong and the chart looks strong and they have good accumulation distribution, and then and they have good earnings, and then they sell off for whatever reason, which often happens.
Yeah,
I mean,
the market could just be upset one day. Yeah.
Yeah, they buy on the rumor and sell on the news. Right. Yep. So those are good ones to watch. If everything else looks good and after earnings they sell off, then that's a good opportunity to buy it.
Yeah. Very cool.
All right. And my newsletter, if anyone's interested. Again.
Yep. If you are listening on the podcast, again, it is breakpointtrading@gmail.com. Dan, thank you very much for reaching out. I'm glad you brought us this warning. I'm glad this. This
and the warning may not happen.
Of course.
As anything else. I mean, I showed 3 reasons why it might. Yeah. But it might not. But just something to keep in mind and be careful.
Hey, I'm just learning. I don't have any skin in the game. I'm just going to watch, and we will be back at it next Sunday. Okay.
Sounds good. Have a good vacation.
All right, buddy. Thanks again.
Take care.